All right, joining me now is Steve Forbes, Forbes Media chairman. Steve, good to see you.
Good to see you.
Yeah, I got to ask you. So when Joe Biden took office, the consumer price index was 1.4%. Today it's 8.2%, and Joe Biden's telling us he's working hard. This is his top priority to reduce inflation. It sounds like his solutions may be the wrong solutions to impact inflation.
Well, when he says he's working hard on inflation, it makes you wonder maybe he should spend more time in Delaware and not work, because clearly his policies are failing. They're doing everything they can to throttle production in this country, not only with energy, but in every other part of the economy. They're going after the gig economy, which is going to hugely raise costs in the economy. You have the SEC and other agencies applying new regulations on almost a daily basis. That's throttling the economy. You have a tax increase coming next year, and then you have a Federal Reserve that still believes the way you control inflation is by making people poorer, by downsizing, in effect, downsizing the economy, throwing us into a recession.
You know, Steve, it's interesting. President Biden was talking about how he's made progress over the course of the last few months. And I think what he's referring to is gas prices have come down. And I would argue the gas prices have come down because, one, he's released oil and gas from our strategic reserve, number one. But number two, traders think we're going to go into a recession. So prices have come down in September, but they're back up again in October.
Yes, it's amazing. When prices go up, it's somebody else's fault. When prices go down, it's his genius. Now it's back to somebody else's fault. And he's done everything he can to throttle oil and gas production in this country. And the only way they know how to control inflation is when you throttle an economy, prices come down because people buy less. You mentioned the oil markets. Internationally, we see Europe in a recession. We see China having problems, Japan having problems. So oil prices come down because people are buying less of it. That's not conquering inflation. That's making people poor.
That's exactly right. I want to get your take on this because President Biden was in California yesterday speaking on the administration's plan to lower prices. Listen to what he thinks will happen if Republicans win in this year's midterm elections.
We've got an election in the month. Voters have to decide. Democrats are working to bring down the cost of things and to talk about around the kitchen table. If Republican wins, inflation is going to get worse. It's that simple.
Steve, your take.
Well, unfortunately, with this administration, you should take the opposite of what they say. And whether it's fighting inflation, whether it's doing something against the bad elements in the world, I love it when a few months ago they were saying, we're doing all we can to bring down gas prices, except producing more oil and gas. Hello. So with this, it's Republicans. How are they going to raise inflation? Well, he didn't quite say it's not that quite simple. What the Republicans simply are going to do is stop him from creating conditions for more recession and more inflation.
Well, the one thing Republicans can do if they take control in November is they can stop the spending. I mean, that is one small step we can take to address this inflation-driven White House and Democrat Congress. But I thought it was interesting. The president's saying that he's fighting for working people. Listen, hourly wage workers, the working people in America have left the Democrat Party in droves and come to the Republican Party. And they've been replaced by corporate America, by Wall Street, by big tech, by universities. But the average men and women of this country realize that the Democrat policies have been destroying their economic lives.
Well, when Joe Biden, take a cue from Ronald Reagan, when Joe Biden comes by to working people and says, I'm here to help you, clutch whatever is left of your wallet, because he's going to make you poor with the policies that he's pursuing. And again, what he's doing is doing everything he can to make sure that the labor markets tighten up next year. You already saw 1 million fewer openings in the jobs report.
That's right.
And the Federal Reserve continuing to raise interest rates artificially, which is also damaging the economy. So again, don't look at what they say, look at what they do. And I think that's why the Republicans are going to do well. And one of the things they're going to do, fortunately, is not fund, you talk about the power of the purse, those 80-some thousand new IRS agents who are going to be harassing like locusts, middle class and small businesses. We'll be spared that. That'll be a good start.
Yeah, I think they're going to have to actually recall some of that money because it came in one of those packages. That money has already gone out the door, so they're going to have to actually have legislation to pull that money back. And hopefully
but they have to have money for the new fiscal year, and they can X that out.
You do good point, Steve. But I want to get your take on this, too. So retail sales remain stagnant in September. coming in unchanged at 0%. What does that mean to you, Steve?
Well, what it means is people are having to buy less. Grocery sales on paper look great, up 11, 13%. But in terms of what people are actually buying with that extra money is less. So people are spending more and getting the same or less. And that's what those retail sales are indicating. It was a disappointing report. And you're going to see more disappointing reports in the future, not just in terms of buying physical goods, but also I think you're going to see a hit starting in services, which have done relatively well recently. But people are running out of spending power because the economy is slowing down.
Steve Forbes, spending more and getting less. It's a sad state for the American economy and the American family. Thank you for joining me. I appreciate it.